Is gold a good investment in 2024? Top 5 gold price drivers. Gold is expected to benefit from several drivers in 2024. In this video series, we will cover the top 5 gold price drivers and reasons to invest in gold in 2024. To learn about all 5 reasons right now, plus a bonus, see the link to the full article in the video description. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. Gold price driver number 5, U.S. fiscal uncertainty, the U.S. national debt. The U.S. Treasury plans to borrow $816 billion in Q1 of 2024 alone, the most ever borrowed in the first quarter. In 2023, the U.S. government had crossed the line of $34 trillion in debt. In the past 2 years alone, we have seen the U.S. government run wartime deficits in a peacetime economy. At this present rate, the U.S. is adding $2 trillion to its debt every year in what could be described as good times. To quote Mark Goldwine, Senior Vice President at the Committee for Responsible Budget Management, if we keep adding this much to the debt, in good times, things could get really awful in bad times, and we can't grow our debt faster than our economy forever. To this point, the United States debt to GDP ratio is 123%. This would require a lot of economic growth to overcome. At $1.7 trillion, the fiscal year's 2023 annual budget deficit was the third largest ever in history. This amount is staggering considering the lack of actual crisis. Furthermore, the interest expense alone on the debt is projected to be $1 trillion or more at the present interest rates, creating what is known as fiscal dominance. Remember that term. You will be hearing more of it as the year goes on. So how exactly does that affect gold prices? We are getting to that. The real question is, how will the government pay for all this debt and interest? A balanced budget? Given the spendy culture in DC, not likely. Will either political party raise taxes in order to bring this budget into balance? Not if they want to get re-elected. Who will pay the piper? This expense, as always, will be passed on to present and future generations through inflation, the invisible tax. Inflation is taxation without legislation. According to the data provided to us by the same spendy government, inflation has been going down from its 9% peak in 2022. Many Americans are still recovering from the losses experienced during this period, and the Federal Reserve's aggressive hiking policy to counteract this inflation that they initially thought was transitory has only increased the cost of debt and the interest lending burden on ordinary Americans, adding insult to injury. It is largely believed that the Federal Reserve has ended their aggressive interest rate hiking campaign and that interest rate cuts will begin sometime in the first half of 2024. Interest rate cuts usually weaken the strength of the dollar and send the price of monetary metals like gold and silver up. The value and price of gold is inversely correlated with the strength of the dollar. It is worth pointing out the obvious, that prices are still rising just at a slower pace. The Fed's 2% sweet spot inflation target, as measured by the fairly dubious government data, still equals, at best, a 2% erosion of your wealth and retirement savings year over year. Imagine your doctor telling you your health is declining at 2% per year, not improving. Good job. Suffice to say, 2% inflation is just enough loss of purchasing power and currency depreciation to go relatively unnoticed. Whether you earn a paycheck, dividends through stocks, interest through bonds, or any other income stream, once you get past the tax payments, capital gains, and other administrative costs, you are still experiencing, at best, a 2% loss in wealth due to inflation. Gold investing plugs that hole by providing portfolio diversification. Gold acts as a hedge against your losses in other income channels caused by the uncontrollable burden that is inflation. Gold also appreciates in price the longer you hold it. The reported measurements of inflation are one thing. The average lived experience by the regular everyday American is another. Please kindly leave a comment on your personal experience with the cost of living and its effects on your day-to-day behaviors. Remember, your retirement savings are also dwindling at the same time. We will explore the next driver that will push up the price of gold in 2024 in the next video. Be sure to subscribe to this channel so you don't miss it. Also, see the link to the full article in the description below. If you are ready to get started on your gold investing journey, see the links to the free guides in the video description. Thank you for watching.